Gentlelady from South Dakota, Ms. Noem, is recognized to strike the last word.
Thank you, Mr. Chairman. I just wanted to comment on another portion of repeal of a tax that is included in this portion of our bill. And it's a very important tax that needs to be eliminated. It's the HIT tax, the health insurance tax. And I know the Democrats didn't talk much about this because I think they recognize that they used this tax as a multi-billion-dollar fee in Obamacare that imposed on health insurance premiums. And with the increases in insurance premiums that we've seen over the years, it's been very clear that this tax targeted small businesses that purchase health care for their employees. I would like to, Mr. Chairman, submit to the record a letter from JCT that was sent to Senator John Kyle a few years ago that said very clearly that while uncertainty exists, we assume that a very large portion of the fee on purchased health insurance premiums will be borne by consumers in most markets, including in some markets with a high level of concentration among market participants covered by the fee. It also said, given the incidence analysis discussed above, while there is uncertainty, we expect a very large portion of the insurance industry fee to be passed forward to purchasers of insurance in the form of higher premiums. So, Mr. Chairman, I'd like to submit that letter to the record.
Without objection.
I also wanted to comment on the fact that nearly half of the hit is paid by those making $10,000 to $50,000 a year. Now, earlier, Mr. Larson said that there is no guarantee that industries pass along savings to consumers if this tax is repealed. Back when the White House was controlled by President Obama, he asked Harry Reid to delay the HIT tax in the 2015 omnibus because they knew that they couldn't afford the extra increases that it would cost on health insurance premiums. They were already getting beat up by the increases. They did not want them to continue to go up. And President Obama himself asked Harry Reid to include it in that omnibus to make sure that that 3% delay would not happen. In fact, Oliver Wyman did a study that found that premiums that were, in fact, 3% lower in calendar year 2007 as a result of that policy due to the delay. So we recognize clearly that this tax was passed on to the consumers, and it was engineered to affect virtually every family and every small business in the country in order to bankroll their failing health care laws. So I know it didn't get discussed much or talked about by the Democrats during this section of the bill, but I do want Americans to know that we care about the high costs that they've faced in their premium increases and the unaffordability. Just because everybody has a policy doesn't mean that they can afford health care. It doesn't mean they can pay their deductibles. It doesn't mean they have a doctor that they can use in their area, especially in a rural state like South Dakota. Accessibility has become almost impossible for many people. I've talked to Pete in Sioux Falls, a small business owner, employs 20 people, pays 60% of his employees' premiums. The ACA renewal rate increased 38.45%. One employee paid $161 a month, now pays $305. He can no longer afford to pay his employee premiums because of the increases of the Affordable Care Act. Steve from White, South Dakota, receives insurance through the employer. Out of pocket under ACA doubled. His premiums increased 0.7% due to Obamacare fees and taxes, has 6 kids, worries about their health. I have sheet after sheet after sheet of increases in premiums because of Obamacare that families are struggling with. Here's another one. Went from a 90-10 plan from Blue Cross Blue Shield in Illinois to an 80-20 plan. Now only has 2 plan options. Out of pocket went up $200. Jeff from Sioux Falls, $200 a year increase under ACA. His deductible went up to $2,500. The bad economy means he hasn't had an increase in pay to cover insurance hikes. Another one, Lisa from Rossholt, Sanford plan was canceled. $507 a month to $747 for worse coverage. To get a plan comparable to the old one would be $1,000. The HIT tax clearly wasn't a tax on insurance company. It was a tax on premiums. According to one expert analysis by former CBO Director Doug Holtz-Eakin, the HIT tax forces the average American family to pay an additional $5,000 over 10 years in extra premiums. That's why I'm glad we're repealing it in this legislation, and I'd ask everyone to continue to support the bill. With that, I'll yield back, Mr.
The lady yields back.